Well, Leighton, you say we start this month and there's an uptrend in the cotton market.
A big upward move, in fact, on Wednesday ahead of the February 28th export sales report. Also in the markets this week, the corn trade faces uncertain conditions for the upcoming new crop. Wheat sees some increasing feed demand as more cattle are placed in the nation's feedlots in the month of January. March cotton settled at its highest level in 2 weeks at the close on Wednesday. The wire services say the spike in the futures came as traders were positioning themselves ahead of the February 28th weekly export sales report. That Thursday report was expected to reveal some big export sales numbers for cotton. The Doane Cotton Commentary reports that December futures had been looking somewhat toppy until that spike, but now Doane says the uptrend in cotton appears very healthy. Well, many analysts are apparently feeling the U.S. corn crop for 2013 is somewhat of an uncertainty at the moment. Sure, they know the planted acreage is likely and going to be huge, but the questions come when you talk about the condition of the soil the corn is going into in some parts of the country. Trader John Roach explains.
I mean, what we have is a lot of acres that are going to be planted, and half of the corn acreage is going to have very dry subsoil conditions. And now we could recharge some subsoil and we could get into a better position, but at the moment we're going to need to have very timely rains all the way through the growing season for at least half of the corn belt, at least the part of the corn belt that's west of the Mississippi, and even some to the east. So it's a real dicey situation as far as yields are concerned, but we know acres are going to be very large.
In the wheat sector, analyst Virgil Robinson says it appears more feed demand is surfacing. He attributes that to the fact that the price of wheat and the price of corn are fairly close as we transition from February to March.
Soft red wheat, the value of it has declined and aligned itself again with corn value, or pretty darn close in select areas. So I think it's the recipient of some feed demand. And the department acknowledged that in February, increasing wheat for feed. And as long as those two price levels remain fairly close, I think wheat will be in demand as far as feed is concerned.
Our trivia quiz this week deals with growing interest in marketing pine straw in Mississippi. And here's the question for you. Which type of pine straw commands a higher market price? Is the answer A, longleaf, B, loblolly, or C, slash? You'll find out in a few more minutes. If new tractor manufacturing and sales by one company are any indication, the ag economy in the United States is still strong. An Iowa newspaper reports that John Deere has added almost 1,500 union wage workers to the payroll at its huge Waterloo, Iowa facility in the last 3.5 years. Now, the total employment there at the plant where many of Deere's large tractors are made is now roughly 6,000 people. That the newspaper says is the highest number of workers there in 20 years. The monthly cattle on feed report was released since our last Farm Week production. One aspect of that document may signal the end of what has been a trend for several months. Extension Ag economist Brian Williams talked about the numbers late Thursday morning. Brian, did this latest cattle on feed report vary significantly from previous months?
We saw a few small changes from last month. One change was there was a 1% decrease in the total cattle on feed compared to last month. There was a 13% increase in our placements compared to last month, and then a 10% increase in the fed cattle marketing compared to last month. But I think a lot of that can be contributed to the seasonal changes rather than market.
Well, kind of bringing this down to the farm gate, are we producing more cattle right now than the market can really support?
In short term, yes, but in long term, no. And there's a lot of reasons behind that particularly don't have to do with the cattle market itself or the cattle production itself. We saw some hits in demand that were kind of unexpected with a snowstorm on the East Coast, with the flu outbreak, and with the payroll tax that kind of kept hitting the demand for that. So in the short term, it's hit it, but I think that we'll kind of come out of that in the next few months.
But for right now, it's kind of tough if you're in the feedlot business. I mean, they're basically losing money as each head leaves, right?
It is. They're taking hits from both sides. On the cattle coming in, the the prices of the feeder cattle are still strong fundamentally with the short supply, and then on the other side coming out with these recent decreases in the demand, temporary decreases in the demand, that's hit the fed cattle prices a little bit. Plus the corn prices have been staying somewhat strong too, so they're just getting hit from all directions.
So as far as fat cattle, are we near a bottom maybe as far as prices in that arena?
I think we're getting close to a bottom. We've saw prices come up a little bit over the last week, and the fundamentals are there. And I think as we get into spring and summer, as people start firing up the grills and getting out, shoveling out of the snow and stuff, we'll see the demand pick up a little bit and help out the prices on that side.
And on the feeder side, briefly, what's the price picture? Stronger right now than fed, but down the road, what do you think?
I think we're still going to be strong, and even though I've been saying this as prices have been going down, I think that the fundamentals are there in the feeder cattle market, particularly just because of the supply issues and the total herd size is decreasing. And I think that's really going to keep strong fundamentals in the markets.
Before this week's feature story, our trivia answer is next, and that answer this week is A. Longleaf pine straw typically commands a higher market price, according to a new publication from the Extension Service.